Evening, everyone. It's 5:25, and this is your closing comment for Wednesday, the 23rd of February. And this is video number 1163. Um, I really don't want to get into this way, but I'm going to say it anyway, just to remind everyone, and I'll pat myself on the back. I warned you, new highs in December were going to be reversed in the first month and the first quarter. And as of today, we have closed now below the January low. That January low in the in the Nasdaq was 13,700. Now, on that day, we rallied all the way back to 14,500 and closed up on the day and had another rally. And so, no big deal, no harm, no foul. It was in an area that looked like it could support a rally. And I'm going to remind everyone here that bear market rallies, which is pretty clearly, you can call it whatever you want, but when everybody goes from buy the dip to sell the rally, it's a problem. Um, and so we are now in a position where the next spot on the NASDAQ is roughly 500 points lower, which is not a big deal. Could happen at tomorrow morning's open. Not that it's not a big deal that it won't hurt people, but I have a feeling it would be relatively temporary. So I'm just going to go through a couple of these charts as opposed to going through a bunch of stock names. I'll get to that in a minute. So you've seen what the NASDAQ looks like. Let's take a look at the S&P. The S&P has done pretty much the same thing, and today, or the low that week, was 42.1275. We closed 42.22. So this is the low close. Remember, in early January, I told you if the market breaks the lows, and this is straight from Dennis actually, if the market breaks the lows of December in January, then we have a real problem. And frankly, that's what happened. That's what happened here. And it looks like it's going to happen again. Unfortunately, there's not much until about 4,000 in the S&P. 4,000 in the S&P is 222 points. That's 3 times the size of the loss today. Looking at it another way, a measured move from the high 4,800 down to the low 4,200, and then the rally that fails here. So 48 to 42 is 600, and this was roughly 4,600. That would be 4,000 on the measured move. Would bring it back into support, and the rising 100-week moving average comes through at 38 and change. Let's take a look at another one. And this actually is the only one that hasn't followed through and broken as severely, and that's the Russell. And the Russell has a lot of small companies in it. Okay, so the Russell closed exactly on that 100-week moving average today. It has come down further. We came down from a November high. So we topped out here in November, where the Dow didn't top out until the 1st of January. And since that November high at 2460, we've come all the way down to 1900, 1892. That's a pretty extensive move. It looks to me like it's probably going to break again. If we break this low at 1892, which is $50 from here, there's going to be problems too. Now, the good news. Frankly, I think that most of the problems are pretty well priced into the market. Um, Rate increases are baked in here. War risk, while is difficult to bake in, but the fact of the matter is I guess we're probably got a little bit of risk there. Um, but again, for companies that don't make profits, this is a problem. So let's look at some stocks. We had TJX, which beat top and bottom line, closed yesterday 65 and a quarter. This morning opened at around 61, traded down to 59.85, and then all the way back up to 65.84, and then fell back again to close 62 and a half. 62 and a half was kind of mid-range, down 4%. Not really surprising in this kind of market and in the retail sector. I think this is one of the best retailers on earth. We bought some calls this afternoon on it, and I traded some on the bounce this morning. Lowe's, good numbers, bad action. This morning when we talked, the stock had closed 214.59. It was trading at about 220, which was up $5.50, 2.5%. It rallied all the way up another $7 to 227. The end of the day, though, 215.09. So $12 off the high, still up 50 cents on the day. I'll give you another one that is somewhat a bellwether. RCII, Rent-A-Center. This is the company that does all of those appliance and furniture rentals for people who have apartments and either can't or don't want to put out the money to buy stuff. They just rent it. In late 2021, the stock was 67. They missed, by the way. On Friday of last week, the stock was 41, so it was already down about a third. Yesterday, it closed at 34.76. Pardon me, today it closed 34.76, which was down another 2.95, and then it reported. The last on the stock is 23.80, down another 13.91 or 37%. Their complaint was that the federal money dried up, inflation was an issue, supply chain, and gave a crappy outlook going forward. So here's a stock that's basically gone in the last 12 months from 67 to 20, 23. So it's currently down about 62%. We see these all over the place. I'll give you two more, and then I'll go to the futures. eBay, with not terrible numbers, 50.33, down 4.82. And Lemonade, if you recall, Lemonade uh, was a deal that last year traded as high as 188. Closed today 22.95, down $1.57. Then it reported $19.63, down 4.89, or another 20%. Okay, so oil was up. Let's just go through these really quickly. Oil was up 20 cents. Nat gas was up 13 cents. The gold was up about $3, but had been down pretty hard. I mean, the low on the gold was 18.91. So it was $20 lower than where it closed today. And it really doesn't look like, well, this is the weekly. Let's go back to a daily so you can get a little better perspective here. Came all the way down, last 3 days of consolidation, higher high, higher low, higher high, higher low. Today an inside day, higher high, lower high, higher low. But closing on the top, this is a recovery high close. So I wouldn't really be terribly surprised to see it move higher. Bitcoin closed down 255, which in the grand scheme of things over the past couple of weeks is really not much of a move. However, It had been up during the day to 39,000 and 39,235, and it closed 37,660. So it closed down on the day on the low, an inside day, not much really to hold it until about 36,000, 35,700. The dollar was up a little, the bonds were down a half a point, and so that's about it. So all I can tell you is I'm not going to go through all of the averages, but the big loser was the NASDAQ. And the internals were 3-1 to the downside. The VIX was up 220 to 31 and change. Still not a, still, you know, not a spike like we tend to see, but I have a feeling that that's coming tomorrow, at probably at the open. So that's what I have for you. I'll be back first thing in the morning. And by the way, in talking to Dennis this afternoon and discussing both the markets and the accounts that he manages for me, we are up roughly 60%. So, there are other alternatives to owning stocks. There are some tax advantages. Dennis is an excellent trader. He doesn't get paid anything but percentage of the gains. And so if you're interested, give me a call or a direct message through the Discord room. The link is on the front of this video. And I'll be back first thing in the morning. We have claims, new home sales, and the second look at Q4 GDP. Have a good one.